Good morning, traders. Happy Friday. It is the 22nd of March, 2024. It's 8:01 a.m. Chicago time. This is episode number 2642. Please remember that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. How are you all today? How was the week for you? Lots going on this week. Hopefully you're making strides, if not in your P&L, at least in your eliminating your errors and getting closer and closer to your goals. Let's take a look at the convergent trading pre-market summary sheet here. Overall, a mixed market. We see the Euro stocks are off a little bit today, but in general, just basically sideways after yesterday's continuation trade in the indices higher. We're seeing copper come off today, silver and gold, precious metals, and Bitcoin basically all behaving like a currency. We see that the dollar is stronger. The dollar's stronger today. What's on the news? Not too much today. The Japanese CPI number came out, much anticipated. It's Japan's CPI comes in a little bit lower than expected, a little bit softer than expected. Um, the U.S. urges Ukraine to stop striking Russian oil facilities, especially pipelines. And the German IFO came out higher. IFO business climate came in at 87.8 versus 86 expected. So overall expectations also came in pretty strong, 87.5 versus 84.7 expected. Then we got a few other numbers, China's FDI and so on. Really not that much today on the calendar. What we have left here is we have an ECB speaker at 9:15, Fed's bar at noon, ECB's lane at 1, and then we wrap up with Fed's Bostic at 4. The S&P is in a multi-distribution profile, which makes it a price discovery day, at least the overnight session. The inventory is 100% long, 100% long currently, and the range is 19.5% points. So we're seeing the range kind of falling versus yesterday. We're still holding on to the 5,300 handle. Pretty strong market. We're seeing a little bit of acceptance at these higher prices currently. So let's take a look at what we've got. Yesterday, if you recall, we talked about the very real possibility that we're going to continue running up from the Fed Day rally. We expect it to run higher, but I talked also about the fact that we left balance, or we left the point of control at the low end of the range, and I highlighted the importance of that 46, 47 area. Inventory's not long. Huh. Okay, let me see. What is going on here? Inventory's not long. It does. Hang on. You're right. That's right. Something's up with my data. Thank you for that. Let's take a look here. Oh, I'm missing. Okay. So, correction. Inventory is basically flat. Okay. Um, so inventory is flat. Thank you for pointing that out, Love and Peace. For some reason, my analytics platform didn't load yesterday's data, so it had the settlement from the Fed day, not the settlement from yesterday. In either case, well, that's good because that makes more sense to me because it is given where we are for the inventory to be very long. the overnight inventory to be very long, the low needs to be above yesterday's close, and this makes sense. So what we're doing is we've straddled in the overnight session. We straddled the we've straddled the gap zone that we left behind. Now remember yesterday, again, we talked about how the market has run away. It does have a little bit of a weak structure. It closed pretty strong, but um, from a an auction perspective, we have a risk that this is likely to come back down and rebuild this weak structure down below. Yesterday was a meh day, basically an open auction out of range, and then it just kind of sat sideways. We finally poked through the IB high, but ultimately we ended up being responsive, and we didn't really do much with that response. We ended up moving to 50% of the gap, which is the gap zone low, to the open. Like, how big a gap is this? And we ended up filling in the midpoint of this and didn't do very much. There was no real fire under the buyers yesterday to keep going. The market's kind of the market is kind of stalling out up here. So overall, today is likely to be a rest day. We've run up. We've done all of the testing down that we were gonna do. We ended up coming back. We broke higher on an impulse. We had our continuation day. This is expected to be a consolidation or compression day this morning. That's what I'm looking for here. So on the ES, looking at what we've done overnight, you can see there's pretty active price discovery. It has moved through the yesterday's low. We're dealing with the 5,300 century figure here. This is likely to be a noisy area. There's a lot going on in this region, but we're likely to close with the weekly high above us at yesterday's high, and we're likely to finish somewhere in the middle. As I said, I'm not having really high or huge expectations this morning as to how active this price discovery is going to be. The move lower at 6 our time. The move lower here in the S&P, I did not find anything that correlates with it. It is Friday. It is the end of the week after a big run up, and so it's likely to see some correction activity. But overall, the fact that we have this multi-distribution profile in the overnight session, we're trading against the 5,300. We've poked lower and almost filled the gap to the prior high, which is right here. To me, this looks like a fill-in day in development. The VWAP, full session mid, are right here, just above us, right at settlement, 5302. So this is your line in the sand. Basically, settlement is the line in the sand for this session. If we are above, look for it to attack the overnight high. Look for weak pullbacks to push to the overnight high, and your extended target becomes yesterday's point of control, 53.19. Okay, and then if not, then if it's not able to hold on to the 5,300 this morning, and we have weak pullbacks, strong pushes, weak pullbacks, then you're looking for the gap fill to the Fed day high at 52.8950, and then we're looking for it to move back and go back to settlement from Wednesday, right? In this case, it would be somewhere in this 52.86-87 range. Those are the two plays. No idea which one is likely to pick up. It's really a function of how we handle this region here, which is the 5,300 to 5,302. So this morning, keep a close eye on what goes on here at 5300, 5302. Do we, if we crisscross it, if we just go up and down and right through it as if it wasn't there, then we are likely to see balance. We're likely to see a choppy day. Um, this is a good this is a good indication that you should keep your hand off your mouse. If we push cross below and then have weak pullbacks, then we have our target, the gap close as mentioned, at 52.89.50, and then back to the 52.86.87 for settlement. Not really expecting it to run down to 47 today. Anything can happen. And then alternatively, if it pushes, excuse me, if it pushes through the 5302 and then we have weak pullbacks, then the point of control becomes a key target above. And again, that's a 5315 or so. And then the extreme of that would be 5320. Yesterday was a relatively balanced day. Okay, so what this is doing here is it has kind of outrun its fuel a little bit, is what it's showing. And when that happens on all-time highs, folks think, okay, this is done. It's going to come right back down. I have a surprise for you. All-time highs are not made that way. They just aren't. What it is you get a rounded top. You get this thing stalling out. You get it consolidating. You get it trying again, and then finally breaking if it's going to break to the downside. So it's much more probable that we go into balance than anything else. So we're looking at an open auction out of range to the downside yesterday versus an open auction out of range to the upside versus yesterday versus the day before. So we'll see how that goes. So the buyers have made a showing, the sellers have made a showing, and we're in between. And so it is probably a period of detente, or like this kind of sitting sideways. The Nasdaq, quite impressive yesterday, managed to run away with the Fed. Same scenario, left value behind, ended up gapping through this weak structure we had from that Friday 2 weeks ago, or was it a week ago, 2 weeks ago? I don't remember. And ended up actually eking out an all-time high right at the open, pushing through the 18,700, the prior all-time highs, 18,691, and then very responsive yesterday in the Nasdaq. It really struggled to stay above the high. So the NQ is again going to very likely fill in this weak structure that we see here, these single prints, and probably sit sideways. There's just so much news that has been factored in this week. This is probably due for a rest. So the bottom line for these indices is that it is very, very likely to need some rest today. Here's the Russell. Russell again, the weaker of the bunch. Yesterday, the Russell just built a nice fat beer belly here. It did leave an excess low. It seems like flow is coming into the small caps. Here again, when the market has a huge risk appetite, it goes to the small caps. It's where you get the most bang for your buck, as opposed to buying, General Electric or something like that, or Ford. You're going to go to the smaller caps, which are very quite technology and quite financial heavy, so you can get more beta for your money in something like the Russell. And what the Russell did yesterday is, instead of it opened in an open auction, it had zero interest. Although it was very close, it had zero interest in the prior auction and left a buying tail or an excess low, and that excess low is likely to carry it through to today. And what we see in the overnight session is it basically held the belly of uh, this profile from yesterday. So I expect more of the same. The Russell is very likely to push, to test down and push back up in the way that it's structured right now. Crude oil, crude, remember we talked about, hey, this thing had a really hard time holding on to 83, and it is very likely to pull back into the 80. Got pretty close yesterday. Today it is breaking the one time framing down. Crude is very likely also to sit sideways today. There's not much in terms of news. The U.S. is trying to stop the attacks on Russian oil exports and pipelines. This has kind of been, this is probably going to have a cooling effect on oil if it stops. But overall, we're building balance after the gap, and we're in what is um, a composite profile here. So this is following the gap. This is a ripe area to build a composite volume profile with this push higher through this day here. And based on that, you could see that, you could see it here also. It's the same. You could see that we are basically opening, testing yesterday's high, and coming right back into the most recent balance price, which is 81. More crude sitting sideways. Okay? Good luck today. I wouldn't commit too much to today, to any one trade today. I wouldn't do that anyway. Um, but I wouldn't commit or lean too hard into today's trading. I may be wrong. The market might tip um, based on a news event or something, but I'm not seeing all that. I'm actually off today. I need a day off. It's been a super, super busy time for me since the beginning of the year, a lot going on. So I'm just not going to trade today. I'm going to spend a day with my wife and catch up with her. Good luck today, and I'll catch you all on Monday. Take care.